Morning, Bill here with the Metals Minute. Today is Monday, March 7th, 2022. $2,000 gold over the weekend. Gold breached that important $2,000 mark. Now, understand, we could have guessed what would happen next. And that's what's happened so far this morning, an avalanche of paper selling. And that has driven gold down somewhat off of the $2,000 mark. Even so, it's still higher than it was at our last update. So even when gold had its runs of the past, whenever there were 5 to 8 times increases, which it seems like we're beginning one of those periods now with stagflation coming in, and anytime we had similar economic conditions in the United States, which hasn't been that often. But whenever that's happened, gold has had a significant rise. Even so, during those periods of time, there are pullback periods. There are short times when they would bomb the market with paper selling. And so just take advantage of those opportunities if you can. I don't believe it'll last long. And so just expect that that will happen from time to time. Doesn't stop the overall uptrend. But let's talk about oil. There's some things going on with oil. Oil's been rising, as everyone knows. If you purchase gasoline at the pump, you can see that price increase there for yourself. But there's a lot of people saying, well, why don't we do more with American oil? And over the last few days, there have been special envoys that have gone to Venezuela and they've gone to Iran, and they're trying to work out something with these other nations that we have previously had under severe sanctioning. And the idea is they, before we can cut off Russian oil that's coming into the United States, they're trying to open up some other channel for oil to kind of replace the Russian oil with. And many people say, well, why don't we just use our own oil? And I agree. I think we should do what we can with our own resources, but there's also a reason why we're still importing oil. Even at the height of the shale oil production in the United States, when we were a net energy exporter, a net oil exporter, even during that period of time, we were still importing oil. And the reason is because the grade of oil that our refineries are set up for, in fact, most refineries in the world, need a grade of oil that's different from what comes out of our shale oil extraction. That oil is a very light oil. It's somewhat more refined than cruder oil, heavier oil, which comes out of places like the Canada tar sands, comes out of Venezuela. They call it a sour crude, heavier oil, and that's also what comes out of Russia. So when oil is refined, it has to be of a certain consistency, and they mix our shale oil with heavier oils from around the world, and that's what is needed to be refined. So it's like we all need each other here on the globe. It's hard for any one place to have everything. So that causes complications when we're trying to sanction people and when there's wars involved and things. So it makes it difficult to have the right grade of oil. Even if we were to open up all the American spigots, we would be challenged to have the right amount. So having said that, I don't believe this oil situation is going away. And as we know, when energy prices rise, and that's what they seem to be in the trend line doing, labor costs are rising, this puts a floor under energy. So, under precious metals. And so I believe precious metals, even though they're in an upward trend, they're just getting started, and it still has great value for your dollars and my dollars if we're looking for a place to park some savings. So I encourage you to check that out. Thanks for tuning in. We'll see you later this week. God bless.